Are you a business owner looking for some last-minute deduction ideas to minimize your taxes? Here's a few tips you may want to listen to. First tip, most business owners know delay revenue into the following year as we get closely approach December 31st. So as closely approaching December 31st, if there's any income we can push off into the following year to the much that it's in your ability to do so, would be wise to limit your tax liability. Secondly, expenses. On the flip side, we know any expenses we can accelerate into the current year will limit our taxable income. So any capital expenditures that you may have been planning for in the following year, to the extent you can accelerate that into the current year, that'll limit your expenses, limit your taxes by increasing your expenses. On the subject of expenses, most folks don't realize a couple of things. First, any expenditures made on a credit card are accrued in the year that it's incurred, whether or not you've paid for it in the current year. So if you're an escort or a Schedule C sole proprietor or a partnership and have a business credit card, any expenditures made on that credit card before the end of the year can be expensed in the year it's incurred. Any expenses incurred after January 1st are in the following year. On expenses also, we have the safe harbor. Any expenses you pay in the current year that are going to be incurred in the following 12 months can be expensed in the year incurred. So you can prepay next year's rent to your landlord and take the full 12-month expense in the current year if you're looking for some last-minute strategies to limit your taxable income. If you have any other questions, feel free to reach out. As we approach the end of the year, we're looking for ways you can limit your taxable income and maximize your tax savings.